What is happening in the markets? We've got a packed show today that you absolutely cannot afford to miss. Get ready for the most electrifying updates, the kind that shift the entire landscape. The pace of news is insane, and if you're not plugged in, you're missing out on the biggest moves. Today, we're diving deep into data that's showing us exactly where the smart money is headed. This is your essential briefing, the pulse of the market, the stories that matter now. Don't go anywhere, because the Bitcoin Bulletin is live, and we're kicking things off with the intel you need to stay ahead. First up, are we seeing a golden opportunity unfold? We're breaking down the signals that suggest a significant divergence in Bitcoin's realized cap and price, a pattern that could be the key for major institutional players looking to make their next big move. Is this the moment to get in? We've got the analysis. Then, we're heading to El Salvador to uncover their cutting-edge approach to keeping digital assets safe. We'll explore the quantum risks and the innovative strategies they're deploying to secure their Bitcoin portfolios, offering lessons that could be vital for everyone in this space. Get ready for this one. A brand new project is making waves, drawing direct comparisons to Bitcoin's monumental 15-year journey. Could this newcomer actually replicate that explosive growth, but in a fraction of the time? We're talking massive potential and a strategy that's turning heads. And finally, we're challenging the narrative with a contrarian view that's sure to spark debate. A prominent voice is weighing in on Bitcoin's perceived fragility, even as institutional buying continues. What does this mean for the future? We're getting straight to the heart of the matter. Stick around for all this and more. You need to be subscribed and have those notifications on. Let's go. A strategic entry point. The financial world is buzzing with talk of significant shifts, and new data is emerging that could signal a prime opportunity for major investors. We're looking at a fascinating divergence between Bitcoin's realized capitalization and its current market price. This isn't just a minor fluctuation. It's a metric that analysts and institutional players closely watch to gauge the underlying health and potential of the asset. When the realized cap and price diverge in specific ways, it can indicate that the market is undervaluing the asset relative to its historical cost basis, or conversely, that it's overheated. This particular divergence is being interpreted by many as a strong buy signal, suggesting that Bitcoin might be entering a phase where its true value is being unrecognized by the broader market, presenting a strategic entry point. Bitcoin's realized capitalization represents the sum of the values of all Bitcoin UTXOs at the price they were last moved. It's often seen as a more robust measure of Bitcoin's value than its market cap, as it accounts for lost or held coins that haven't transacted. When the market price trades below its realized cap, it suggests that, on average, holders are underwater on their positions. However, when the market price significantly deviates from the realized cap in a way that suggests undervaluation, it can be a powerful indicator for astute investors. This current divergence is catching the eye of institutional investors who are always on the lookout for such nuanced signals. They are adept at analyzing these on-chain metrics to identify potential undervalued assets before the wider market catches on. The implication is that significant capital could be poised to enter the market, attracted by the perceived discount. This scenario is particularly interesting because it comes at a time when institutional adoption of Bitcoin continues to grow. Funds and corporations are increasingly allocating portions of their portfolios to digital assets, and they rely on sophisticated analysis to make these decisions. The realized cap price divergence provides a data-driven basis for such allocations, moving beyond speculation and into a more analytical approach. It suggests a potential for significant price appreciation if the market corrects this perceived undervaluation. The question on everyone's mind is whether this pattern will hold, and if it will indeed trigger a substantial influx of institutional capital, potentially driving the price upwards. It's a complex interplay of technical indicators and market sentiment, but the data points towards a compelling narrative for those looking to position themselves strategically. But is this the only indicator smart money is watching? Stay tuned as we uncover how even geopolitical strategies are now being built around digital asset security. Next, we're heading to El Salvador to explore their cutting-edge approach to keeping digital assets safe. Quantum-proof security. In an era where digital assets are becoming increasingly integrated into national economies, the security of these holdings is paramount. El Salvador, a nation that has famously embraced Bitcoin as legal tender, is now at the forefront of exploring advanced security measures, particularly in the face of emerging technological threats like quantum computing. This initiative highlights a forward-thinking approach to safeguarding national reserves and public trust in a rapidly evolving digital landscape. The nation's strategy is not just about adoption, but about robust, future-proof security. The primary concern is the potential impact of quantum computing on current cryptographic standards. Quantum computers, when they mature, could theoretically break the encryption algorithms that secure many of today's digital systems, including cryptocurrencies. Recognizing this future threat, El Salvador is reportedly investigating and potentially implementing quantum risk mitigation strategies to ensure the long-term security of its Bitcoin holdings. This proactive stance is crucial, as a successful quantum attack could compromise the integrity of the blockchain and the stored assets. The country's approach involves a multifaceted strategy, likely encompassing the adoption of quantum-resistant cryptographic algorithms, secure hardware solutions, and rigorous security protocols designed to withstand even the most advanced computational threats. This move by El Salvador is significant because it sets a precedent for other nations and large institutions considering or already holding substantial amounts of digital assets. By addressing quantum risk proactively, El Salvador is demonstrating a commitment to the enduring security and viability of Bitcoin as a financial asset. It suggests that the nation is not only focused on the immediate benefits of Bitcoin adoption, but is also investing in the long-term infrastructural resilience required to maintain its position. The lessons learned from El Salvador's strategy could prove invaluable for the broader cryptocurrency ecosystem, encouraging a wider adoption of quantum-safe practices across the board. It also underscores the growing sophistication of digital asset management, moving beyond basic wallet security to address existential technological threats. The focus on portfolio security also extends to operational strategies. This could involve diversifying storage solutions, implementing multi-signature protocols with enhanced security features, and potentially exploring cold storage solutions that are physically isolated and air-gapped. The integration of these advanced security measures is not merely a technical upgrade. It's a strategic imperative for a nation that has placed its economic future, in part, on the success and security of Bitcoin. The implications are far-reaching, suggesting that the future of digital asset management will increasingly involve a blend of cutting-edge technology and robust, adaptive security frameworks. While El Salvador is securing its future, a different kind of digital asset is trying to create its future by looking to the past. Next, we're diving into a project aiming to replicate Bitcoin's legendary rise, but in record time. The next Bitcoin, but faster. In the fast-paced world of cryptocurrency, narratives of explosive growth are often fueled by comparisons to Bitcoin's historic 15-year journey. Now, a new Ethereum-based Memecoin, Pepito, PEPITO, is generating significant buzz by positioning itself as a potential 100x asset by 2025, aiming to mirror Bitcoin's monumental rise, but at an accelerated pace. This ambitious comparison highlights the market's perpetual search for the next big disruptor and the enduring allure of replicating past success stories in the digital asset space. Pepito launched as a pre-sale project, quickly raising over $6.5 million at an initial price of 0.00000015. The project has garnered a community of over 100,000 members, with proponents labeling it as the next Shiba Inu or even the next Bitcoin. The core of its appeal lies in a carefully structured tokenomics model designed for long-term growth and stability. With a total supply of 420 trillion tokens, allocations are strategically distributed: 30% for the presale, 30% for staking, 20% for marketing, 12.5% for liquidity, and 7.5% for development. The staking rewards, currently offering up to a staggering 235% annual percentage yield, APY, are a key incentive for long-term holders, aiming to foster a dedicated community and reduce short-term speculative selling. What sets Pepito apart from many purely speculative memecoins is its integrated utility. The project features Pepito Swap, a decentralized exchange, DEX, that operates with zero fees. Crucially, all transactions on this platform are powered by Pepito tokens, creating a built-in demand mechanism that is independent of external market hype. The platform has already attracted interest from over 850 projects looking to list, suggesting a potential for high trading volume and sustained token utility. Furthermore, Pepito has taken steps to bolster its credibility by undergoing 2 security audits from reputable firms, SolidProof and CoinSalt. These audits are vital in an industry often plagued by scams and rug pulls, aiming to assure investors of the project's legitimacy and technical soundness. The project's marketing strategy also plays a significant role in its rapid ascent, with regular content updates, community engagement initiatives, and planned exchange listings. Analysts are projecting a potential 5,000% price increase, forecasting a target of 0.00000075 by 2025. This optimistic outlook, however, is contingent on several factors, including the broader crypto market's performance, sustained community interest, and the project's ability to deliver on its roadmap and maintain its utility amidst fierce competition. While the comparison to Bitcoin's journey is compelling, the Memecoin's success will ultimately depend on its ability to carve out a sustainable niche in the highly volatile digital asset market. But not everyone is bullish on the market's trajectory, especially when it comes to institutional plays. Next, we're examining a contrarian view that questions Bitcoin's strength amidst its own growing popularity. Bitcoin's fragility exposed. Even as institutional interest and adoption of Bitcoin continue to surge, a prominent dissenting voice is casting a shadow of doubt over the digital asset's perceived strength. Peter Schiff, a well-known gold advocate and vocal critic of Bitcoin, has recently offered a contrarian perspective, suggesting that Bitcoin might be more fragile than its recent price action and increasing institutional backing would suggest. This viewpoint challenges the prevailing optimistic sentiment and raises critical questions about the long-term stability and resilience of Bitcoin as a financial asset. Schiff's argument often centers on Bitcoin's inherent volatility and its lack of intrinsic value compared to traditional assets like gold. He frequently points to Bitcoin's speculative nature, arguing that its price is driven by hype and market manipulation rather than fundamental economic principles. While institutions are increasingly allocating capital to Bitcoin, often citing it as a hedge against inflation or a store of value, Schiff contends that this trend is misguided. He suggests that these institutions are falling prey to a speculative bubble, and that any significant downturn or negative catalyst could lead to a rapid and severe price collapse, potentially much larger than what has been observed in previous market cycles. His critique extends to the very nature of institutional adoption. Schiff often posits that large-scale buying by institutions does not necessarily equate to underlying strength or long-term viability. Instead, he argues that it could simply be a sign of a market nearing its peak, where latecomers are drawn in by FOMO, fear of missing out, and the perception of inevitability. He frequently uses historical examples of speculative bubbles to draw parallels with Bitcoin, warning that the eventual bursting of this bubble will be more devastating due to the sheer amount of capital involved. Furthermore, Schiff often highlights the regulatory uncertainties surrounding Bitcoin and other cryptocurrencies. He argues that increased regulatory scrutiny or unfavorable government policies could significantly impact Bitcoin's price and adoption, making it a risky proposition for institutional investors who are typically risk-averse and highly sensitive to regulatory environments. The ongoing debate between Schiff's bearish outlook and the bullish sentiment driven by institutional adoption underscores the polarized views within the financial community regarding Bitcoin's future. While proponents see increasing institutional involvement as validation and a catalyst for further growth, critics like Schiff view it as a potential sign of a maturing bubble. His perspective serves as a crucial reminder that despite the positive momentum, significant risks and uncertainties still surround Bitcoin. Investors, both retail and institutional, must weigh these differing viewpoints carefully, considering the potential for both substantial gains and significant losses in this highly volatile market. And that wraps up our deep dives for today. But before you go, let's hit the highlights one more time. Now, stay tuned for the lightning round recap and your full call to action. And that's a wrap on another action-packed Bitcoin bulletin. We covered a potential strategic entry point signaled by Bitcoin's realized cap price divergence, explored El Salvador's quantum-ready security strategies, analyzed a new Memecoin aiming to replicate Bitcoin's growth at warp speed, and heard a contrarian take on Bitcoin's fragility. Don't miss out on future updates. Hit that like button, subscribe to the channel, ring the notification bell, and make sure to follow us on all social platforms so you never miss a beat. We'll see you next time.